Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Let's cover the payment company Toast. This is a company I'm personally familiar with. I use it for a small business that I started in 2017. But tell me a little bit about Toast, what they do, and what you find attractive from a business standpoint.
Yeah, so Toast is a financial technology company specifically tailor built for the restaurant industry. They have several different ways of generating revenue. So, first of all, you can sell a hardware point of sale device. They even have some digital menu boards that they are in the business of selling to restaurant companies. They also have once you get the point of sale device in there, they can generate revenue from transactions, so taking cut of transactions at the restaurants. And then they also have a whole suite of software products. And from that, they charge a ongoing, not licensing, but ongoing fee for being a subscriber to the software modules that they have. And so basically, it's just technology for restaurants.
And why is Toast so interesting as opposed to some of the other players in the space? Because this is one of those kind of crowded spaces if you just are looking for a payment solution, but maybe Toast has an advantage that you are particularly intrigued by.
Yeah, it's a good point. In the past, I've really liked Olo, for example, as the first mover, founder led, some very impressive people on the board of directors, including the founder of Union Hospitality, founder of Shake Shack, Danny Meyer. So I've liked Olo in the past. There's also players like Shift4, Square, or excuse me, Block, even in this crowded space. What intrigues me about Toast is apparently something that they're doing is working. So if you look over the past year, 1 year ago, 62,000 restaurants using their products and services. Right now, up to 85,000. So just in the past year, we've added over 20,000 new restaurant locations to the Toast platform. So apparently, something that they're doing is working. And so I don't have personal experience with using any of these things. So that's a number that really interests me. It's what is actually the one out there gaining adoption. You look at some of the other players, specifically Olo. I've liked Olo a lot in the past, but you look at the growth, the adoption, it's just not holding a candle to that of Toast right now. So this is something that definitely intrigues me about Toast over
And,
the others.
and just one thing to add, I think it's interesting how these companies are like specialty versus do everything. Like a PayPal or a Block are going to be building tools that you can run any kind of business on. And Toast's real differentiation is, hey, we're going to be focused specifically on the restaurant. And the handheld device was really, to me, the game changer when we were choosing what sort of payment system we are going to go with, because it eliminates a lot of the things that we've been doing, like those little pieces of paper that you jot orders down on that we've been using for 100 years. So it's obviously caught on, like you said, and sometimes just seeing this product out in the wild, absolutely everywhere, is a really bullish sign for a company like Toast.
Now, from an investment perspective, here's where things really get interesting to me. If you were to put in a Toast into a stock screener, for example, it doesn't have free cash flow. It doesn't have profitability, right? Not going to look very attractive on that basis, but you start to think about this and you look at what's going on. So you have the high expense. A lot of Toast customers are smaller restaurants, maybe only a couple locations, whereas Olo's kind of catering to these big 500 chain restaurants. Toast is a little bit more localized, a little bit more mom and pops. So that's a large expense, sales and marketing, going into attracting these smaller customers. Big expense there. Hardware revenue is actually negative gross profit margin. So you're
Mm-hmm.
losing money there. Transaction revenue is actually very low profit margin. Off the top of my head, is below 20%. What is attractive is the software side of the
Yep.
business. And the expense is going to be more heavily weighted to the front when you have the sales and marketing, when you have the hardware going in. Once you get that installed, the revenue is higher quality the longer you're with that customer and as they adopt more products. So just a couple of years ago, two exact, of the restaurant locations with Toast, only 21% were using 6 software modules or more. Today, that is 42%. So it's doubled over the last 2 years. And so you start to see the financial metrics trending in the right direction. So gross profit margin has increased for 4 consecutive quarters. Selling, general, and administrative expenses, SG&A, as a percentage of revenue has dropped for 4 consecutive quarters. So you start to see this going in the right direction. And that actually makes sense when you think about how the business works from a financial perspective. And I think it's something that's overlooked by the market. They're looking at where it is now. But when you think of how many restaurants they've just added over the past year, 20,000, that's very heavily weighted up front. Those should pay off in 2 or 3 years with much better financials. So that is why Toast is really intriguing to me here.
The other thing to add to the network effect is not only are you sticky from a specific restaurant standpoint and you can start to move up market, but staffing. Hey, I know how to use Toast. You're hired. That is a huge differentiator when you're hiring people. Love that pick. Thanks, John. What do you think? Leave your comments in the comment section below. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody. See you here next time.